In 2026, everybody wants no doc funding. The hype train has been let out of the bag. Late 2010s, early 2020s, people are looking for lending requests that will request no financial statements, no tax returns, fast approvals. But the question is, if banks aren't asking you for this information, then where do you expect them to get it from? So in this video, I want to give you the biggest advantage that you can give a bank and yourself in 2026 and beyond to minimize documentation requests during a business lending request. And that's going to be relationship banking. So I want you to stay focused in this video. This is going to be a banger. We'll be providing you some really strong insights that will give you the advantage that you need to have success with your lending requests and approvals, with minimizing possibly even no documentation and still getting qualified for quality lending products, not just crazy hole in the wall lending products, but good quality, good terms, good rates. So pay attention in this video. For those of you who are new, welcome to the invitation. I'm JP. I'm going to be your business banker and your capital strategist going forward. So let's talk about this for a second. I got some talking points I want to cover for you in this video to keep everything concise. The first thing I want to talk about, what is no doc funding? Let's make sure that we're clear on this to be, on the same page. So no doc funding is going to basically be where you submit a request, and within that request, you're being evaluated for your risk level and your qualifications without that bank having to pull external data on you and your business. That is a very tall ask, especially if it's a very sizable lending request. There exist programs where some banks will give a certain exposure level, 25, maybe even up to 50,000, where they will minimize or maybe not ask for any documentation. But believe it or not, the caveat to that is exactly what I'm covering in this video. They do typically expect you to have an existing banking relationship. You can't expect a financial institution to know nothing about your business and then turn around and ask nothing about your business in order to qualify you for funding. It makes absolutely no sense. So the trade-off is, if they're not getting external documentation, then how can I provide them the information they need to do fair due diligence and evaluate me through underwriting without pulling external information? How do I paint the picture for them? That's what we're going to be covering in this video, okay? So no doc is going to basically be lending requests that you can be evaluated for without having to provide external documentation or verification in most cases, all right? So let me put it to you this way. The lender doesn't need to know anything about me, is the concept that a lot of people have, unfortunately, due to the internet, hype around business funding and business lending. The no doc craze is because most of us are either brand new in business, been in business for years, but never kept any documentation on our business, or we don't have the best financial data points once those documents are revealed. That's usually the three buckets we fall into, why no doc is even appealing to us at all. Because I meet business lenders who have no problem supplying documents. They walk in with a manila folder or a binder or a suitcase ready to provide anything you need. So this isn't everybody, let's be clear. But for some of us, especially from underserved communities, we tend to be vulnerable around these things because we either don't know anything about it, we didn't keep up with it, or if we did provide it, it wouldn't paint the prettiest picture of us. So to be fair, we're basically looking for lenders to blindly shoot in the dark and provide us with thousands, tens of thousands, or maybe even hundreds of thousands of dollars in capital with little to no due diligence. That is the psychology of no documentation in our current atmosphere, okay? So that's not responsible lending. That's not how that works. A lender still needs basis for determining ability to repay, cash flow, credit worthiness, business stability, risk, account behavior, existing obligations. The question isn't whether the bank needs information. The question is where that information comes from. All right? So external data versus internal data. Let's make a distinction. So external information, tax returns, financial statements, bank statements from elsewhere, credit reports, business credit reports, proof of revenue, supporting documentation, might be your Secretary of State, your EIN letter, whatever the case may be, versus, in contrast to, internal information, deposit history, average balances, cash flow patterns, merchant activity, ACH activity, payments, existing credit performance, account tenure, product services use, and overall relationship. The deeper your relationship becomes, the more information your bank may already have about your business and how it operates. This is the true golden ticket to no doc or minimal documentation funding that is sustainable and actionable for the majority of business owners. You can click in as many videos as you want about no doc. You're going to find out that it's something that most people can employ. It's a bank that a lot of people don't have access to, or it's a strategy that doesn't make sense for your business. What I'm giving you is a unique gem because I'm not a content creator first. I'm an actual business banker and a capital strategist first. I'm giving you something that's actionable that you can apply to majority of banks, doesn't require a crazy strategy, and is applicable for the majority of businesses. Big difference. So the last video, I argued a $10,000 deposit isn't relationship banking. That was my last and one of my most recent videos. I talked about how just dropping a lump sum of money into a bank and just sitting on it for 90 days and walking in thinking that you're about to get this massive business lending approval is not how that works. It's kind of insane, to be honest. This is exactly why I told you putting $10,000 into an account and waiting 90 days isn't enough. This video elaborates into that further. You're undermining the bank's ability to do due diligence and their willingness and their obligation to do due diligence, okay? So the bank doesn't just need to see money sitting there. It benefits from seeing money in motion. Big difference. So revenue comes in, expenses goes out, payroll gets paid, vendors get paid, cards get used and repaid, balances fluctuate, cash revenue accumulates. This is a totally different set of information now. Now this is different. So cash tells the bank what you have. Cash flow helps the bank understand how your business actually works. When you borrow money from the bank, you're not just going to sit it in a deposit account and then pay it back out of that deposit account. You're going to deploy that money into something, and the activity, the function of your business will determine if that bank is able to recoup the money that they gave you. So if they're assessing you, clearly they want to assess your activity. They don't want a snapshot. They want an entire picture. They want a full-length picture, the closest to it they can get. I don't want to see how cute you look in a moment. Let me see a video. That's a different story, all right? So exercise the full depth of the relationship. Hopefully my internet is not breaking up too much for y'all. I don't know why the Wi-Fi has been struggling, but it has been. But exercise the full depth of the relationship, okay? So let's talk about operating account. So run actual business revenue through it. You can't get around this. A lot of you, your biggest problem is you don't have revenue yet. Other than business credit cards, maybe early intro lines of credit, if you got really polished business data points, outside of revenue, good credit, the business is established well, etc., you might get away with a business credit card or up to a $25,000 line of credit or something at certain banks. But for the most part, revenue is going to be an irreplaceable factor in getting you qualified for real funding. All right. Business credit cards, just talked about that. Establish responsible credit usage and repayment history. If you do have business credit cards as your early lending product, really a cash flow management tool, but lending product from a bank, then make sure you're using it effectively and paying it back responsibly. This will help build your internal relationship banking, internal score data points. Merchant services allows the institution to potentially see transaction activity associated with sales. So this is the most verified way for a bank to be able to look in and say, this business is generating real revenue through real business activity. For those of you who are confused or unaware what merchant services defines, it's your ability to take credit card, debit card, point of sale services, all right? So ACH and bill pay is another one, creates visibility into operating activity, all right? Payroll, another indicator of an operating business. Legitimately set up payroll, not you just going in there and transferring money between your personal and your business account. I see that way too often. Legitimate payroll, big difference. Savings and reserves demonstrates liquidity management. Yes, you still want to have some money on hand for emergencies, operational support, and or expansion opportunities. Treasury and cash management services, especially as a company is growing. This is kind of merchant services, but in a broader capacity. So this also could include invoicing, for instance, things of that nature. Allows the mechanisms for you to operate or manage money coming in and going out through the most official channels possible for all you Cash App lovers. A business banker. This one's probably the cream of the crop, the cherry on top. All right. A business banker, human component of the relationship. You aren't using products just to impress the bank. You're consolidating enough of your legitimate financial activity that the institution can better understand your business. And there's no better way to do that than working through a business banker. So establish a real relationship with a real banker. So a banker becomes a part of your capital strategy. So this is where this channel is going to separate itself, because I'm a business banker and an actual capital strategist. So this channel is going to be the most valuable for you as you work towards accessing capital and establishing functional high-level relationships with banks. The banker should know what the business does or what the company does, how it makes money, what's its annual revenue, is revenue growing, what are the owner's goals, what capital might be needed in a 6 to 12 month time frame ahead of time, what challenges is the company facing. The banker should also know what is the eventual use of funds, again, ahead of time. You should be working through that. So the worst time to introduce yourself to a banker is when you desperately need money. The proper order of operations is relationship equals data equals trust equals capital opportunity. I'll run that back for you. Relationship equals data, which builds trust, which equals capital opportunity. You see the order? A lot of y'all are out of it, unfortunately, but that's why you're here, for me to help put it back in perspective. So, hypothetical comparison to close out the video. Business owner A has $250,000 in annual revenue, banks somewhere else, opens a new account, deposits $10K, waits 90 days, and requests $75,000. The institution has very limited internal history. Pause and think about business owner B and compare. Same $250K in revenue, has banked there consistently, operating revenue flows through the account, using business credit card responsibly, maintains reserves, uses merchant treasury services where appropriate, has conversations with an actual banker, and requests the same $75,000 in lending. Which business does the bank understand better and is more likely to extend capital to? Put it in the comment section down below. Business owner A or business owner B? Comment it down below and let me know. So relationship banking doesn't override bad fundamentals. Let's be fair, all right? Relationship banking cannot magically fix the next following bullet points. It cannot fix insufficient cash flow. It will not fix excessive debt, poor credit, losses, overdrafts, unstable revenue, prohibited high-risk industries, and inability to repay. Relationship banking is a loophole around underwriting. It's not, excuse me. It's the opposite. Relationship banking is not a loophole around underwriting. It makes your underwriting easier. It makes underwriting easier. Remember, we're just trying to limit documentation requests through external means. It's not changing the fact you're being evaluated in totality, and it will not compensate if you're not fiscally responsible or well-positioned financially. There's no way around that. There is no loophole. So please stop watching videos that are suckering you into this idea. There's some kind of way you can finesse the bank around the fact that you have no revenue, or you have poor revenue, or poor account management, or poor personal credit by building business credit. Please stop watching these idiots. It's not real. They're going to set you up for failure. So comment down below transparency, because what we're looking to establish for the bank to build trust, they need transparency from us as business owners. So comment transparency as well down below. For those of you who are new to the channel, make sure you fully subscribe and tap in. There's no channel like this on YouTube giving this kind of information and insight if you're an entrepreneur or a business owner. who has the background and credentials and the qualifications to package this for you and bring you this kind of information for free on YouTube, because this is also something that people will charge a lot of money for. So make sure you comment business owner A or B down below. Make sure you comment transparency, so I know you paid attention all the way through the end of the video. And I want you to subscribe, like, comment, share, subscribe, so you can support this channel, so this channel can clearly continue to support you. For those of you who want to know more about my background as a professional, get in the about section to get started with that, and get in the description section so you can also get tied in with my book that I self-published that the channel is derived from, called The Invitation, in the description section down below, available on Amazon, Barnes & Noble, Walmart, almost wherever you want to get it from, and working on the audio book as we speak. Other than that, I appreciate you for tuning in and investing in yourself. I want each and every one of you to stay focused, stay in motion, and I'll see y'all soon.